Hey everybody, it's Friday Fire. A lot of stuff to talk about, plus a lot of nerves out there in the world, and it's been a rough week. A lot of weird stuff went down, and we're going to try to break it all down. I want to thank the moderators, American Beijing'er, Sean D, T&D, and everybody else for coming. And of course, Adam Q. Thank you all for coming. This is, I'm trying to, Fridays, I try to sew together a tapestry of all the stuff that went down this week and weave in the stories to get a feel for where we're going to go at the weekend. Typically, crypto goes up at the weekend. Will that be the same? But first of all, let's talk about this, not financial advice. And shout out to Patreon too. This is, make sure I can read it. Vegan Sheldon says, I'm glad to be in your Patreon. I'm glad you're here too. Now, the elephant in the room is this. Right now, as we speak, there are two fellows having a meeting up in Alaska. And it was a bit of a gangster move to fly a B-2 bomber overhead when they walk out. Very, very bizarre. Anyhow, show of strength, etc. Who knows? But the outcome of this could impact the markets. That's why we care. So fingers crossed, all goes well, and they cut a deal, and we find peace. You know where. Anyway, the other big elephant in the room is this. We had a very interesting situation where basically a couple of kicks in the teeth happened during the week. Bessent said, first of all, number one, we're not going to buy any more Bitcoin. And number two, the amount that they said they had was about 160,000. So there seems to be 38,000 missing by my calculations, because the confiscated Bitcoin was about 198,000, and that went into the strategic Bitcoin reserve. And then Bessent gets up and says, nah, we're not buying anymore. Nope, not interested. And the Bitcoiners were very, very upset and very sad. Everybody had dreams of a big strategic Bitcoin reserve. But I know enough in life that if you bank on something for your investment decisions, especially when governments are involved, oftentimes you will be let down. So be careful. However, because of the outcry, we'll talk about backtracking a couple of times today as well, because of the crazy outcry out there. Bessent said I don't know if he said he sparked confusion, but he definitely sparked a lot of confusion, saying the US won't buy any more Bitcoin. Then quickly clarified in a massive about face out there. He said, yeah, we won't buy more Bitcoin, but we will, I think he said it on Twitter or somewhere, we will explore a budget neutral pathway to acquire more Bitcoin. And the strategic Bitcoin reserve, etc., will be built on, getting to hopefully 1 million Bitcoin. So it was your typical off-script comment that rattled the markets. But the point is, he is backtracking, and I do believe the leadership, the administration, are all very pro-Bitcoin, and they want the US government to hold Bitcoin because they know the money printing is going to continue. And mathematically, the only way you can, in fact, do any damage to the deficit is to buy Bitcoin. We'll talk about debasement at the end of this video, which shows exactly why that is the case. Now, let's talk about this next. Jumping ahead. Another little bit of good news. We had another piece of capitulation yesterday, with the nerves rattled not only about the PPI, i.e. inflation on the rise because shelter is going through the roof, but this is from Axel. During yesterday's pullback, about 16,000 Bitcoin were sent to exchanges at a loss from short-term holders because they couldn't take the pain. The good news is, after that kick in the teeth, that's all that was sent, ladies and gentlemen. And that is noticeably less than previous drawdowns. And the chart shows a trend of decreasing amplitude of capitulations. Okay? That's the little blue piece there. The blue arrows, all right, essentially indicate the sellers are exhausted or they've got no more to sell. Basically, it indicates weakening sell pressure from the short-term holders, which is a good sign. So again, no matter how bad the kick in the teeth, everybody's kind of tapped out right now in terms of how much they can dump. So that's good news. Another piece of good news too, ETFs are still on fire. Solana ETF, the ETH ETF has been completely explosive. And the Bitcoin ETF still, BlackRock is still chugging down Bitcoin like there's no tomorrow. And this is from Econometrics. And basically based on the ETF flows and taking averages, it calculates the expected range for the next 30 days has moved higher. And now the model that they have points to a range of 111K to 131K, with an expected value of Bitcoin being above 121,000 by September. Okay. Again, it's 2 weeks away. We were at 124,500 48 hours ago. So that's no biggie, but it is a confident sign that we're not going back. Bitcoin Max, Mike, thank you. This is very important because a lot of people think, oh, as usual, every time the market takes a dip, the first thing people say, that's it, pack our bags, go home. That's the end of the bull run. But no, it is not. Just look at the ETF flows. Now, I did promise to talk a little bit about debasement, and this is why the US does need a strategic Bitcoin reserve, as I mentioned here. And slide 5. Bessent should know better. He needs it. Anyway, why? Is because the money printing continues. But this is a brilliant little wake-up call for debasement. Oftentimes get questions about debasement. And this is a chart that maps the actual annual inflation since 1971, which also was the collapse of the Bretton Woods system. And it mapped inflation across 152 countries. Large number of countries there. And it was this stunning actual results. So if you look at this chart, you go from Brazil, Argentina, Venezuela, all on the far left, all the way to Germany, Switzerland at the bottom. Of course, Germany flipped over to the euro, but we won't get into that as well. Switzerland is the least inflated country since 1971, nearing an average of 2.2% per year, but that is still ravaging to your bags, by the way. 107 countries posted averages exceeding 5%. 55 were over 10%. And about, let me see how many had 5%. 107 had 5%. So if you assume the average debasement is 5% per year, as measured by government statistics, which are also often very wrong, if you imagine a $100 bill exposed to consistent 5% inflation since 1971, that value of that $100 today is $6. Okay, you've lost 94% of your purchasing power. But put another way, the other way to think about it is the reverse way of that. If you had to have the buying power of $100 from 1971 today, you'd need $1,600. So again, a great refresher as to why we Bitcoin and why governments need to Bitcoin, why corporate treasuries need to Bitcoin. It's so important. Now, speaking of flippening, we'll talk about flippening twice today. We'll talk about backtracks twice today as well. This is Bitcoin versus the largest assets on the planet. And it's a cool little chart from Sylvain. And it basically breaks down when, at what price will Bitcoin flip these assets. So when Bitcoin gets to 123K, which we actually got to already this week, it flips Amazon. 158K, it flips Apple. 191K, it flips Microsoft. 217K, it flips Nvidia. And 1.115 million, it flips gold. Who's ready for that? Anyway, the point is, where will we get this year? I don't know. Could we reach Apple? Maybe if Apple tanks a bit. Either way, we're here for the show. And this is another reversal story, which is Google. There was huge outcry. It's amazing. You don't really hear about the crypto culture or people until you cross them. So this is Google. They had a Play Store policy which basically blocked all non-custodial Bitcoin and crypto wallets in their guidelines. And after huge community backlash, guess what? They said non-custodial wallets are not in the scope of Google Play's crypto exchanges and software wallets policy. And we're updating the help center to make this clear. So they have actually reversed their way because people were literally saying, oh my God, Google, you're doing this. People actually started buying iPhones to get away from Android. That's how important the Play Store is. Anywho, moving on. Here comes the money printer. More Bitcoin related news because we care. Because the more money printing there is, the more of this there is. Debasement. It's completely related, okay? When the money printer goes burr, the inflation goes up, your purchasing power goes down. That's why you buy hard assets for the millionth time. Literally, probably saying that for the millionth time. But this is the reverse repo rate. Basically, When that goes down, I'll explain this in very simple terms. There is no money in the kitty. So in order for the government to have kind of operating cash flow to operate, they need to do one of two things or both. One, cut rates. Two, print money. Maybe they'll do a combination of both. But right now, it's at the red line, where they have a new all-time low of literally 57 billion in the kitty, and they add that to debt probably every single day. So this is an interesting piece of data to look at. And yes, money printing will come. Quantitative easing is back. And let's look at some crypto for a second. These are the top 8 dApps of revenue out there, created by Syndica, who put this great stuff together. What is interesting is Pump.Fun, which was the winner for most of the year, has fallen by the wayside. And now Axiom, the bot DEX, bot perp exchange, whatever, is now leading the way, making the most money. And a quick clarification too, people are not aware of how much bot activity there is in the world. They think it's only on Solana. No. First of all, it's not only on Solana, it's on all chains, first of all. And second of all, it's not only in crypto, it's everywhere. All the buying, 90% of all the activity that happens in stock exchanges are bots and algorithms. So it's the same thing. So get used to it, everybody. If you weren't aware, you are now. And how the share has developed over time. You can see there was a time when Pump.Fun was doing nearly 80% of revenue, which is insane. And this is all chains. These are all chains, by the way. I forgot to mention the top 8 dApps. Most of them, or all of them, I think, pretty much, are Solana based, because that's where all the action is. Love it or hate it, it's just data. Don't shoot the messenger. But there is a dark horse I want to point out here, and that's the orange one. Hyperliquid is growing fast. Solana still tops, but Hyperliquid is coming up very, very quickly. And the key point of this, thank you, Nagesh, the key point of this as well is in the world, how I always say risk happens fast, but things change very, very fast in crypto. You could have a winning chain or a winning dApp for years and years and years. And then all of a sudden, a new one can pop up and take over. And that's basically Hyperliquid. People say it's just a flash in the pan, but I don't know. It's pretty impressive. Anyhow, moving on. SSK, and again, not to take away from the ETF flows into Ethereum or Bitcoin. Ethereum flows have been insane the last 6 weeks. But Rex shares is the first Sol ETF, and they're up to 161 million. Not a lot, but it's growing, and it's constant accumulation. Again, think about a couple of weeks or whatever it is in action. I think it's 2 or 3 weeks now. It's up to 161 million. Think how many retail investors that represents. And I'd love to know who is actually behind buying this ETF. I know I bought a little bit of a bag in a retirement account, but we'll see. Anyhow, this is also another interesting chart of some more data. And what's interesting about this one is it looks at all the revenue across all the top chains, but going back 5 years. It's hard to believe. 5 years of data is already there. I'm going to turn my camera off so you can see this full chart. 5 years, and which gave me the stark realization this morning was, oh my goodness, 2021 was 5 years ago. You know what was 6 years ago? C19, and it came out in March 2020. Anyway, it's mad to think how fast things change and how quickly people forget about things too. It's also, as a friend of the channel, Digital Asset News, Rob always says, humans have brains and memories like goldfish. I hope he's not correct. That means I won't be able to remember anything. But anyway, shout out to Rob. But here, if you look at one chain I do want to call out, that's the green one. There's only one chain that has continually grown over these last 5 years. It's also the top chain. It also makes the most money. And that is definitely a trend that we can all very clearly see. Some have completely gone by the wayside, as you can see as well. Some that used to be kind of heroes have now pretty much all but disappeared. Anyway, that's that story. And you can see the big ones there, though, are still Solana, biggest, Ethereum, Tron, Binance, big money makers. Now, another piece of fun news. Skipping Stones, happy Friday. The Boring Company is building a 20-mile loop. I used to have to go to Nashville, and I know the airport's about 8 miles from downtown, but they're doing a loop, which means it goes around, I guess. So I calculated, it says a 10-mile loop from Nick Cruz, but I think if it is going from the airport downtown and it is a loop, it's definitely at least 16 miles. And they are doing that. And soon, probably in a few years, the whole country, maybe the world, will be full of tunnels. But it is a very efficient way to get around things like traffic. So here's to more tunnels. And then we'll have some tunnels on Mars soon, I hope, as well. This is out of sequence, but Invesco and Grayscale ETFs are coming. They just got notifications from the SEC that they have accepted their final edits. So we are definitely going to see 7 or 8 more Solana ETFs before the 19th of September. So give it 4 weeks. I don't know when they're going to drip in, but probably pretty soon. In the old SEC, they kind of approved everything at once. The new SEC tends not to do that, which I think is quite interesting. Different pattern, which I welcome. Let's look at Sol Treasuries. Again, there are now, from my calculation and all the ones that I track all Bitcoin Treasuries, all Ethereum Treasuries, and all Sol Treasuries. But there seems to be now 8 Solana Treasury companies. Of course, the big ones are Upexi with 2 million. DeFi Development actually bought another 200,000 there, about 1.45 million Sol today. Mercury FinTech is there, and a few others coming in. Sol Strategies number 5. There's a lot here. I haven't checked some of these smaller ones yet, see if they actually have the bag yet. I think Specimen Inc. doesn't have any, but they have a plan to buy. But I don't know when they're going to get there. Anyway, that Sol Treasury List is interesting, and it's growing very fast. And another thing that's actually huge is liquid staking is exploding. It has now $88 billion that are in liquid staking today. If you compare this to previous cycles, it's bizarre. It's nowhere near what's happened before. We've had some things like certain TVLs and DEX volumes kind of equivalent to 2021, but liquid staking hits a record 86 or 88 billion, I can't remember. And this is absolutely going nuts. And the institutional adoption is also helping this too. And Lido is leading the liquid sector with nearly half of that, I think $41 billion in TVL. And again, the new SEC has also recently published a view on liquid staking, which means it's not a security. So yield away, ladies and gentlemen. It's massive for the crypto space. Again, very grateful to have a new SEC. We went through 4 years of absolute agony under that Gary Gensler fool, but now we're free. And shout out to Square Block and Jack Dorsey. He's been working on a rig for the longest time, and it just got launched. This is a Bitcoin mining rig that you can plug in at your home, keep your house warm in winter, whatever you want to do. And it is air cooled. They call it the ProtoRig. Now, I wanted to see how this puppy actually compared to other rigs, and it's quite interesting. So the ProtoRig significantly outpaces ASICs, e.g. 4x the Antminer 7 S21 Pro. It is definitely suitable for industrial mining, but also one of the things Jack Dorsey wants is he wants individuals to mine as well. That's one of the reasons he built this, to kind of democratize Bitcoin mining. You do need a few of these to match output. The power consumption is heavy. I think it's about 12,000 watts. It's like running a bunch of household dryers at the same time, but it does produce a lot of power for that. And it is about 15 to 25% less power than older ASICs, for example, the T21, etc. And it does about, I think, 14.65 joules per terahash. And it's very strong for an air-cooled system in 2025. A lot of the new models are actually liquid-cooled. But either way, this is great news. So I don't know how much it is. I forgot to look that up. But let me know in a comment below if you know how much this thing costs compared to others. That's the time. I didn't have time to analyze the actual power, terahash, and efficiency matched price. Maybe I can do that tonight and show it tomorrow. Anyway, let me know. And then there is another startling thing. As you know, I talk a lot about AI and the AI impact. I think it's huge. Everybody needs to be aware of what's coming. But this is a brilliant chart that shows you how the world is flipping. We are going from one type of world to another, where remote work triggered by C19, again, I mentioned that twice in one video, General office space, commercial real estate is just tanking. They are giving buildings away in downtown areas, or they're converting them into residential real estate. But you can buy like luxury office space for like $3 a square foot, which is like 80 euros a meter or something, square meter. I can't remember the math on that, but they're giving it away because nobody's going to offices anymore. Everybody's working remote. And as a result, nobody's investing in office spaces. But for the first time ever in the history of the world, the construction work in the US is about to flip. The construction work for AI data centers is about to flip. If I'm blowing up, is about to flip. Guess what? Office space. That's never happened in the history of the world. That means more money will go into developing data centers than office space. And this is all because of AI. And then people ask, how do I get exposure to this? Well, you invest in AI. That's it. NVIDIA, Tesla. It's not hard. But it's a crazy to see this actual chart too. And finishing with meme du jour, Lucid's Gravity. Lucid is an electric car maker. Their electric crossover had 9 US registrations in 6 months from S&P Global Mobility. That is disastrous. People say, oh, car industry or Tesla is hurting. You should look at other car companies. They're all dying. It's brutal out there. High interest rates, a lack of money, or people pumping all their money into the markets. I don't know what, but nobody's buying cars. It's a very tough market out there. So that's kind of some of my memes are very serious and pointed. That's one of those ones as well. Not funny, but Lucid, if it wasn't for money they get from the Middle East, they'd be long dead. And that's the end of the story, everybody. I hope you like the show. Enjoy the summer. It's hot and sweaty. Thank you, American Beijinger, Sean D, T&D, K8, and everybody else for coming. And a big thank you as well to Adam Q over there in Australia, DigiBTC, Bitcoin Maxi Mike, D-Barbs, Forrest, Nagesh, and Skipping Stones. I'll see you all tomorrow where I recap the week. What happened this week? Thanks all. Have a good night.